Hey, it's Soleil, and this is episode 181 of the Orange Pill Investor. And today I want to talk about margin risk and something that I just learned. So, if anybody else is trading with margin, depending on the exchange you're using, this could apply to you. This is something I just learned today. So, I got completely caught by surprise by this. So, I took a look at my video yesterday and I was adjusting my positions, and MicroStrategy was around 1750 or something. And I had in this main account, I had like $88,000 of buying power. Now I was using some margin, completely planning for certain scenarios, and I saw that the market was down. It was like 125 bucks a share. So times 200 shares, that's 250 times 100. So I was expecting to have about $25,000 less buying power. So 88 minus 25 was at 63-ish. And I have negative $16,000 of buying power. So I contacted the folks, the chat folks with tastytrade. They've always actually been pretty good. Where the hell's the screenshot? All right, here we go. This was their explanation. Extended risk slides prior to earnings. If a stock is scheduled to announce earnings, typically up to 3 days out, and MicroStrategy, I believe, was on the 1st, the stress test used to calculate margin will be extended by 50%. So if it was 2020, now it's going to be 30/30. And I don't even know what MicroStrategies were to begin with. So was not expecting this. And the guys, there's nothing I need to do necessarily today, but if this is still like this tomorrow, I could get hit up with a margin call. So even though I thought I was planning my margin requirements responsibly, I'm irresponsibly long, and I've dealt with concentration risk with MicroStrategy before as well. I had like 300 shares of MicroStrategy, and it was literally 90 to 95% of my portfolio. And the hard part is that when the price of a stock goes up, it, in relation to everything else, even if you had it balanced, it just becomes a greater concentration risk as the price goes up. So got that working against me. So this is something that I definitely want to deal with. And I had considered selling a couple of these long calls. It would have been nice to know that this was going to happen yesterday when these were not down $1,200 a pop. I actually considered selling these off some yesterday. I was like, nah, I can hold on to these. I have plenty of buying power. So the first thing I'm going to do, though, is just clean up all the extra BS that I don't need. I don't need 8 shares of HUT. I considered selling some Tesla as well. However, Tesla is already providing me a buffer against concentration risk. So if I dump Tesla to get buying power, I'm just increasing my MicroStrategy concentration risk. So that is kind of a pain in the ass. I'm down to 200 shares, and I was using these long calls to give me enough delta for upside protection. Now I don't have any covered calls on this week, which would have been pretty nice since MicroStrategy is down right now. But I'm not going to carry covered calls over the earnings, just as a matter of caution in case it gaps up for whatever reason. The market doesn't even have to have a reason. They're pretty irrational. But the biggest bang for my buck as far as to eliminate downside risk over earnings is this leveraged stuff here. So it does pain me somewhat to sell these at a loss, but I may have to go ahead and give that a shot. The other thing that I have is I have some buying power in the other account. So I'm actually going to, and here's the official tastytrade policy that they were explaining. So let me move this over. Let me see if there's anything that I anything that I don't want to display here. Yeah, these are my full account numbers. All right, so I'm actually going to try to move 14 grand from my other account. And so that happened immediately on the account that I'm removing it from, but it didn't automatically come up here. So I think this transfer will complete tomorrow. That still leaves me another 2 grand. So let's dump Riot. I don't need these positions. Once I get everything figured out, I can add these back in. One of them is the one that I trade with my son every week, but I've got some Riot positions on Robinhood as well. And then the other one, actually, they might both be now. I can't remember what the other um, trade I have on. We're doing a little bit of copy trading with another friend on X. So let me just close both of these. That's going to get me 1,500. So between the 14 grand that I transferred over and this 1,500, that'll get me pretty close. So the only thing that I have left on this account is my MicroStrategy. I do have this credit spread. That's fine. I've got this one. This one's actually in profit. So here's the thing. So I bought this one before, and this one is at like 50% profit. This is up like 10 grand, but these 5 are down 1,200 each. So for now, it's kind of like, okay, do I want to sell this and book profits, or maybe for tax purposes, do I sell this and book losses? Or do I peel off another 100 shares of Tesla, or even take some extra profits here with these long calls in Tesla? I kind of like these for now. And like I was saying, it's kind of MicroStrategy positions that I need to close. So let's just close one of these. I want to see what try to get 4,400 for it. I may have to ratchet that down a little bit. Let's try to collect 43. Let's try to collect 42. Okay. So once the 14 grand comes in, that should get me to just $3,000 worth of buying power. And I don't have to worry about getting a margin call. Annoying. The other thing that I could do is in this other account, and I'll do this tomorrow, or even if MicroStrategy has a shitty earnings and the market just tanks or whatever, I can go ahead and sell off. Well, I sold these puts to begin with, so I can buy to close these 20 puts, and I can get myself another 14 grand or whatever to transfer over. The other thing that I do to, uh, to mitigate margin risk is I do have other funds that I can move. So, I mean, worst case scenario, I crack open cold storage and sell some precious Bitcoin if I miscalculate on my margin. Um, got money on a HELOC that I can get instantly. So, um, not financial advice or whatever, but HELOCs are pretty cool in that for whatever emergency you might have, if you have a home equity line of credit, you don't actually have to use it. You can just sit there with $50 or $100,000 worth of credit available to you and just not use it. Some people carry, you know, $10,000, $20,000 of emergency fund cash or whatever, but cash is just sitting around not earning you anything. And at least if that equity is available, I don't necessarily have to be paying interest on it. I can just not use it, and then if I need a home repair or I get a dreaded margin call, I can just tap that money. So I do have other uh, strategies in play. So I don't want anybody to think that just these pure numbers here is a safe way to trade margin. I suspect it's probably not. If I didn't have any other ways to prevent a margin call, um, being this long, just two, just MicroStrategy and Tesla, just two tickers, the concentration risk is very strong here. There's not a lot of diversification. But trading this way without any other way to fund this account would probably not be responsible. So please be careful with your margin. We joke around that we're irresponsibly long MicroStrategy, and that's still the case. But it's not as irresponsible as it may look, and everyone should please, do your own due diligence and protect yourself. I fully expect to do very well over the next 12 to 16 months in MicroStrategy. I couldn't be any more bullish. However, that does not mean that the chart won't look like this. So if you're up here at some and you're getting overextended long on something, when it drops from 2,000 to 1,000, you can get wrecked. And even if you think you're being responsible, like I thought I was, it there may be some kind of loopholes or rules that you're not aware of, like this additional earnings extended risk. I was completely unaware of was going to kick in and basically vaporized what $60,000-$70,000 worth of buying power, just all disappeared overnight. And of course, even while I'm talking, MicroStrategy is going down to 1600. So this would this would be the opportunity where I'd be wanting to load up. I would be wanting to buy the dip and adding to my position, but instead I'm forced to just scramble to cover my my margin requirements. So will be interesting to see what the price of MicroStrategy does over the next couple of days before earnings and then after earnings. And really will the extended risk snap back to normal the day after earnings? And we're going to have the earnings result. And let's just say, MicroStrategy does crash 20%. If it crashes 20% and goes back to the regular earning or regular margin requirements, I might be okay. But if the requirements stay here and it crashes 20%, I will be making another video like this one. And at that point, I would almost certainly have to peel off some of this Tesla to cover my MicroStrategy. So I had considered peeling off even more of these, but I think for now, if nothing happens with MicroStrategy over the next 24 hours and that 14K gets transferred, this will be fine. So I think I'm going to stand pat for now. But if over the next 2 days, so I've got the 31st and I've got the 1st, because MicroStrategy earnings is after market close on the 1st. If MicroStrategy bounces back up to 1700 or even 1650 or something like that, maybe I will go ahead and I can just put in a limit order now. So I'll peel off another one of these. If MicroStrategy goes up $100 a share, the delta on this is 46 divided by 4. So about 11 delta. So really this should only go up about $10 a share. So if this goes up to 49, I'll sell another one. So let's close this position at 49. And good till close. All right. That way I don't have to stare at the computer screen. All right, that was a little quick update, but in this 5K account, I do have some buying power, and maybe I can participate in this MicroStrategy dip. So let's just buy like $100 worth of MicroStrategy. Cha-ching, added 0.06 shares. And that should do it. Let's just make sure. Now I'm cutting it really close on this account too. But yeah, this one doesn't bother me. If I have to buy to close these HUT contracts in order to transfer some more money over, totally fine with that. So got several things I could do, and even after earnings, I'll be willing to put a covered call contract back on. So here's another thing that if I really wanted to limit my upside, I could sell an at the money covered call. I'm giving up all my upside, and I could get another 6 grand worth of buying power in here, right now, or go out to 52 days, and even going out to like a little bit of profit, like to the 1800s. Sorry, not buy. If I wanted to sell the 1800 strike for September 20th, I could get 15 grand worth of premium into this account, and this would be shored up a bit. So that's another option too. You can just sell covered calls in your position to get extra buying power. All right. So lesson learned, and I will be watching my earnings in the future. The week prior to earnings, I'll just make sure that I've got way more, not way more, way less exposure, and way more protection against these weird rules that can pop up. All right, that's it for now. Be good, y'all.